Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, I need to go straight to the screen over here because we do have some news coming in 30 seconds. Sorry, I'm starting a little bit late. I don't know what's with me lately, to be honest with you guys. I end up being slow eating and all that. You know what? I didn't sleep very well last night, though, so that's probably a factor today. All right, but we've got CPI US for CPI. We are looking for a reading. Well, the headline, they're looking for a reading of spot 2, and core CPI, they're looking for a reading of spot 3. And here we're getting the numbers, and both of them are in line, and the treasuries are buying that pretty hard. That's really interesting. So I would expect them, though, to maybe retrace that a little bit, and you know, it just kind of turn into a double distribution. If one of the numbers had been low, then I would have expected them to like really extend and just keep going. But it doesn't look like that's what's, you know, they were just in line. I'm a little bit surprised that they've bought this much. But like, let's see, can they get to 110 again? Because that's where they were at yesterday, right? And I don't know what the selling yesterday was. By the way, good morning, Ray SS and Matthias POV. Ray SS, that name sounds new. I don't recognize that name, so welcome to the stream. I'm glad to have you. Today, I am like, I just feel more grateful than usual that we have such a great audience here on our live stream. That I come in here every day. There's people in chat. We have good conversations. You guys understand what we're trying to do. Because most people in this space aren't about that. Oh, it's Raymond. Oh, okay. I gotcha. You've been around. For sure. Like, I've been doing all of this. Hi, Amir. Wait, what? I don't know what he said. Amir said something in Arabic. I've been doing all of this kind of research for the prop firm thing. And, the more I dig into it, the more that I'm just like, man, retail traders really don't want to trade their own account. They just want to risk it all on these funded trader programs, and they want to use technical analysis, and I'm kind of like, you know, as a trader, I expect to be against the crowd, like even against the crowd of traders, because, you know, like the real alpha signal tends to be in the contrarian, right? Because, you know, the consensus, like, everybody already knows that everybody's already doing that. So how are you gonna develop alpha advantage over other people without being the contrarian, right? But it's a lonely road sometimes, and it's a tiring road sometimes. And today, maybe just because I had a hard time going to sleep because kids woke me up and wouldn't go back to sleep, and I had a hard time quieting my mind and going back to sleep, and so I'm a little bit more sanguine about it than normal. But it can be a rough road. So there is a decent amount that is traded there at 22.5. I'm wondering if that's enough to develop a hole here. I'm kind of thinking that it might. So, the thing that I've got to be thinking about with Good Morning Belligerent is that do I think that it's going to just distribute here? Do I think that there could be further legs up? Or do I think that it's going to retrace? And at the moment, I think that all three are possible. I'm a little bit more skeptical. I'd say that of the three, the least likely is for it to retrace now at this point. I think that if they were going to retrace it, it probably would have already done it. And I'm not really seeing these flows going the other way. You know what? Let's go to the higher level charts here and just kind of review what got us here. So here we had the election. Well, I have to actually switch it over, huh? Okay, so we had election, and then the past like 2 or 3 days we've had downside. Yesterday afternoon, some of this selling was really crazy. I don't know what caused this. It just kind of popped out of nowhere. There was like somebody stopping out big time, I think. And you can see over here in the S&P 500, it started to kill the S&P 500 when the yields were rising. So I don't know what was with that, but one theory, I guess, or really the only theory that I have, is that they were hedging for CPI. Hence, CPI comes in line, you get such a strong reaction and they buy it up. S&P 500 is buying it up really strongly off of that news, isn't it? Okay, well, let's look at the other markets. Oil's still down there. Gold and silver's not recovering. Gold and silver really took it hard when those rates started rising again. So it's curious that they're not recovering when it comes back. Copper continues to be rough over there, and I guess that means that the trade over there in China is still not very good. And then we got the dollar. So the Japanese yen, it was kind of stabilizing for a while. It looks like they've reached new lows and the dollar is at new heights. It just keeps going. So is this really all just a Trump trade? I don't know, man. It sure does seem to me that businesses and people that are in you're in foreign policy circles or intelligence, that their whole world is dominated right now by what is Donald Trump going to do when he's in office. I've seen so many articles, man. When Trump ran when he was president the first time, there was a lot of doomsayers. I remember Paul Krugman talking about how the economy was just going to be an absolute, it was going to be an instant recession and all this stuff. None of it happened. But I say that this time around, it's probably 1.5, 2 times more people trying to make this prediction now. Which I feel, hey, it might happen. But I feel like it's a foolish prediction. We don't know enough about how a lot of Donald Trump's policies are actually going to be implemented in practice. Like a lot of the things that he says that he wants to do are things that he can't do on his own. He'd have to do through Congress, and the Republican Congress may not want to play ball, right? So we don't really know what his policies are going to look like. So we just don't have enough information to make that kind of prediction. Now, on the other hand, we are looking at probably like the largest white collar recession of our lives. There's a lot of things about this economy that don't look good. There's a lot of people saying, and, you know, Zero Hedge had this story yesterday saying that it basically that the economy is already on track for a recession and the numbers just aren't showing it yet. And then, you know, Donald Trump's going to take office and they're going to instantly try and blame it on him. Now, that possibility does seem like a real possibility to me. But let's see. Either way, can I toot my own horn here? I don't know. I need to highlight this more. I really do. Look at this. Okay, here's our move. Where did it stop? Right at our line. Every time, man. Every freaking time. And you get a big move like that, that's like exactly where it goes. Like if I had a position on before the news, I would have put it on. I would have put my take profit at 25. That's where the market maker positioning suggests to put it. And it would have worked that time. It's crazy how I can't predict when it's going to be relevant. But when it happens, it's so uncanny, you know? Really uncanny sometimes. All right, so that's kind of the... Now, I think that part of the trade that we've been seeing in the treasuries, the selling, has been this Trump trade. So I guess theory one, they were hedging for CPI. Theory two is it was just a continuation of the Trump trade. So in this situation, us rising on CPI being in line, it doesn't really help us, you know, it doesn't give us any information that would confirm or negate one of those two theories, right? You know what we should do? So I was talking to some people yesterday and they're like, oh, okay, so what's your strategy? And like I had explained it to them. And not like step by step, but like, we've got videos on this, right? Like, do I need to make another video along those lines? Like, because I feel like that all you guys here in chat, you understand what I'm doing. You can probably, to a good extent, predict what I'm going to do before I do it. There's a little bit of randomness to it because there's just kind of something about, you know, this area. I want to buy it. What's the area that sticks out to me? Oh, that was a big order there at 26. That's interesting. But yeah, you know, maybe I should go into more detail on it. But then I was kind of like, you know, past few days I haven't really been writing things down. So let's write things down. We're going to use this window right here. No. We're going to use this window right here. Oh, no, that's not what I wanted. There we go. Should change the script so that it writes this part for us. Oh, yeah. I screwed that up. There we go. Okay, so let's see here. We have Ashkari, Williams, Logan, federal budget balance. Is that later? I don't know if that's Huge market moving event? I don't recall. Okay. Right here is Wednesday. Why do I have it split out between close and news and events? I don't know. So we have Wednesday for the CPI, Trump trade. Momentum was down. So stops? Maybe. Why did we sell so hard yesterday? Was it Trump trade? Hard to tell. Hard to tell. Okay, so what are we doing? We want to come in and we want to say, what are the flows that we've got? Things that we might know about that can potentially predict orders. And it can be a large number of things. It can be existing positioning. It could be news. It could be seasonality. There's a number of factors, and they don't really fit neatly into like this kind of dichotomy that we typically think of between technical analysis and fundamental analysis. You know, like current market positioning is kind of considered technical analysis, but it's not something that you look at a chart for per se, right? So those are some of the things that we've got right now. Maybe we'll think of some more, and then we want to add them together and say, okay, do we have a clear imbalance in the flows? And what I'm seeing here, I think that on Wednesday we tend to have more activity, right? And then we had a CPI as well. So I think that we're likely to have a decent amount of activity, but I'm not so sure that this is really going to extend. I don't see a huge imbalance off of this. So I can potentially see us getting up to that 10. That's kind of going to be a target that we might want to think about. But right now, it really looks like the market is going to be pretty content just kind of messing around in this range. And I don't see a clear imbalance. So that's not going to give us a trade for today, unfortunately. So today is a bad example, but that's how we sort it out. Now, if we come over into like our market order imbalance indicators and all of that, maybe we will see some sort of imbalance forming, and we might be able to guess what that is and whether or not that flow will continue, right? So that doesn't mean that there's absolutely no chance of a trade today, right? It's just we will kind of be a little bit less likely to really come in and now maybe we should do this. That was all focused on the treasuries. I'm probably should also consider the S&P 500, right? Well, I don't know if I see a difference though over there. Especially since we're back above 60-20. I tell you what, I'm back to this. Okay, we want to take some big risks on the S&P 500, but then I come into it and I look at it and I'm like, well, but I'm just like, I might as well just flip a coin, right? And I cannot seem to feign enthusiasm for flipping a coin. Like I need something more than that. And, you know, it can't be something that I know I can just backtest and disprove, right? So I don't know what to do over there. It's just, it's a little frustrating. I'm kind of feeling like going back on what we talked about and just not bothering with the S&P 500. Octavius is looking to long VWAP. Well, did you just got that then? So you went long at 23? So I'm a little bit, so our market maker positioning after all this hubbub is at 19.5. So I'm not saying it's going to make it back there. But if it does, I'll probably be like, see, I told you so. It's another level to watch. If because they have gone a little bit through the VWAP already, right? I am seeing offers stacking on. So when you look at this right here, it's saying that they're adding offers. This says that the overall activity is dying down as well. So what's happening is the market orders have dried up and limit orders are stacking up on the offer. So I don't know how far that will go for. You didn't see any MBOs, so you didn't take it. That's interesting. Did you notice that one a little bit earlier? Like 24.5? There was like a 1,000 lot that was kind of poking around there for a second and then disappeared. Kind of suspect, based on how this was turned out, that that limit order was legit. Like, somebody did want to exit there, and they just kind of was like, oh, this isn't going to do anything, and I don't want to chase it, so I'm just going to sell it right here. That's what I think happened, but maybe not. Is that a little bit better? Hey, yeah, that's way better. So anyways, you know, thinking about this thing that like, I have a great audience and I feel like we have a great stream. I'm a little worried that you know, when I get a new day job, that it might, you know, it'll be a job that starts a little bit earlier and conflicts with the stream. That's a real possibility. And like, I could probably still stream for an hour, but I don't think that really makes sense. I don't really want to do that. So yeah, I'm not liking that. And then part of me is like, well, you know what, Seth, it's okay. If you're doing something that, you know, you enjoy, like, especially if I have the opportunity to like see the inside of a buy-side firm or something like that, right? I should take that, right? I think you guys would want me to take that. But then the thing is, like, you know what, you guys don't necessarily need me. Like, I feel like I've taught you well. You know what it is that I'm doing. You know the evidence behind it. And you all have your own edges that you've developed on your own that are, you know, that you sound confident about. So, you know, you don't necessarily need me around. It's just, you know, it's nice to have somebody to talk to and have a community and be here every day, right? But then I'm like, yeah, your family comes first. But then the thing is like, well, okay. So if that does happen though, where will everybody go? Because if you all end up on some live stream where the guy is just prostituting themselves to every prop firm that they can possibly find and filling your minds with technical, and you know, like, I just can't stand the thought of that. Wait, we need to have here's a heuristic for you guys, okay, right? Like, if Seth has to stop streaming, you know, how to determine which streams might be good streams to watch. And my heuristic is called the least prop firm affiliate links rule. So say, you know, here's me, you've got me, and I have 0 affiliate links for prop firms. I do trading software, that's okay, but 0 for prop firms, right? So obviously that's optimal. But you might have somebody like, I don't know, you guys gonna go watch Matt? I guess you guys could watch Matt. I don't know if you'd be interested in Matt, but he's pretty popular, right? He has, I think he pushes like his one affiliate link. I think he has like 1 or 2 services that he likes and he pushes it. Okay. Right, and then you have some other guy, and he has like all 12. Right, he has an affiliate link for all the major prop firms, right? So what you would say is whichever one has the least prop firm affiliate links, right? So here Matt has 1 and this other guy has 12. So what you would do is you would favor watching Matt over this other guy, right? Now, what if Matt stops streaming too? I'm gone, Matt's gone, then what do you do? Well, this guy has 12 affiliate links, and there's no other choice. So what do you do in that situation? What I would like you to do is just keep to yourself. Don't watch this guy that has 12 affiliate links, because that's just so fucking stupid. You could be more desperate than to have an affiliate link for like literally every prop firm. Oh my gosh. Wow. Oh yeah, you know what? That's a good point, Matthias, is the Ninja Trader stream. You know, well, the Ninja Trader stream does have some good stuff, but they kind of try and pull on everybody. Every time I've been on there, like every time that I'm like, oh, let's see who else is on there today, and I'll see some person pushing things that sound like nonsense to me. But you know, I shouldn't, you know, I shouldn't dive in too deep into that, because I don't know. I don't look into these people's thing. Just know that Ninja Trader is kind of like an equal opportunity stream, right? AO will start streaming. Okay, we got it. Okay, so as long as AO doesn't have any prop firm affiliate links, you use Jigsaw. You can have a Jigsaw affiliate link, but just no prop firm. Yep, go and watch AO. Sounds good. I think we're all set, folks. I feel better now. I feel better. Someone's eating at me. Yeah, trade to music. We will still have the Discord. Push comes to shove. And you know, like if that happens, we'll still have the YouTube channel will still be here, and I'll probably still be putting up videos. In fact, I might, you know, I might be able to make more videos. I might be able to use, you know, because I'm gonna have like a time period of like let's say that I have a job and it starts at 8 o'clock my time. So I usually wake up, I start like eating and everything at 6 my time, and then we try to be here and start the stream at 6:20, right? I think that I could probably eat really quickly, and if it's a place where I have to drive down, every place that I've done is that I've applied to has hybrid work actually, so maybe that's not an issue. But so I would still, even if I had to drive it down, I could probably still be there by 6:30. So that would give me 7, 8. That would give me 90 minutes in the morning still to do stuff. And if it doesn't really work with the live stream, right, then I would just use that time for other things, right? Probably do some reading, and I could use that time to write scripts too. So I might be able to still keep the pace of videos up higher, right? So the channel will still be here. And then maybe we could still do a live stream on the weekend or something. Like maybe we could have a Sunday recap or something like that, right? Seth, you see the funny link I put up on your order flow video? By the way, that's a good profile. I know I didn't see that. If you put a link, I'm kind of would suspect that it would block it though. Let's look. Is that really a good profile picture of me? You know what? When I so when I'm picking thumbnails, you know, I usually try and get the thumbnail with your mouth, you know, like the biggest expression that you can. That was what I was always taught, like works best, right? And you know, I gave everything to an editor this time. He wanted to do it. I paid him for the month, and he agreed to do 2 videos for me. And he just picked the most plain picture, and it was not what I would have picked, but I've been like, well, let's just see how it goes. So it's interesting that you say that that's a good profile picture. Wait, Uzi says, oh no, I don't need that. Oh, Uzi should start a trading channel, and he says I don't need that pressure. You know what though, Uzi? And the funny thing is all this time, I don't think I've heard your voice before, but I kind of feel like that you would do a good job. I kind of feel like you would do a good job. Like if there's anybody that I think would carry on the live stream spiritually, it's absolutely Uzi, for sure. I mean, he's been here the longest, he's been the most active. I really do feel like that. If it came to that I would really appreciate it if Uzi started streaming. Even though I know he doesn't want everybody watching his trades. You know what, in that kind of case though, right? Like what you should do is you should just have a stream where well, you can have your face. I feel like you should show your face. It really bothers me when I go to YouTube creator channels and they don't show their face. That for some reason, maybe they just don't have a camera. I get it, but I'm kind of like, what's the deal? Why, you know, like, I feel like that the face is such a huge part of the connection with the audience, you know? But I don't even put my face on my Facebook account. Yeah, but a lot of people don't show their face, so you're probably okay, right? And so just have a live stream where you show a chart of the S&P 500, right? You don't even have to show the DOM or anything. And you can still be doing all your usual trading on the DOM and nobody will ever see it. And you just chat with people. And I bet you it would do really well. Probably do better. Because the issue with me is I have to say all of these things that's going to turn off a certain section of people, right? But it you know, you can just put the chart up and they'll come and you can all have fun. You might not. I guess you wouldn't even have to say anything, Uzi. You wouldn't even have to talk. You could just chat in the chat with everybody else, just like you do now. Dude, I think we got it. That's what you should do. Christy, you were here a couple of days ago, weren't you? How are you going? Hope you have a good day. I think I'm feeling like I'm in okay spirits now. Yeah, you were here a few days ago. I'm a little tired today because like I also don't remember going to sleep. Like usually I can remember like, okay, what was the situation when I was going to bed? I'm frustrated or whatever about the kids. And it's just like, okay, it's your problem. I'm going to sleep. But I don't remember what happened. I just went upstairs and went to sleep. Got super cold last night too. I kind of had to change the heater. But I think I went to sleep at like 9:30, and then I remember waking up at like 1 o'clock, and Ethan was just screaming his head off. Oh, screaming his head off. I think it was because he was kind of sick and he couldn't like breathe through his nose. And when he can't breathe through his nose, he just like really flips out about it for some reason. He's like, you know, he screams because he wants Tylenol, is what it is. He's addicted to the Tylenol, man. And man, after he woke up, I was never really able to get back into a deep sleep. You better get back to you. Oh, well, you know what? I love that you came in and you said hi. Okay, sorry, I missed a question here. X asks, Seth, when the bonds and the US indexes have positive or negative correlation? That's a really good question, because the correlation between the two of them tends to change. Yeah, you know, it's part of it is that it will just like go through a period where it's like they're positively correlated and they're negatively correlated, and there's like charts out there of like how correlated they are, right? And you can see it shift. But there are certain macroeconomic frameworks where you can't always guess it, but there are certain frameworks where you can kind of guess what's going to happen. And the big one is if the market is moving primarily on either adding more easy money out there, or they're moving on that easy money is going to be taken away, the treasuries and the equities tend to move correlated together. So today on this one, people were concerned about the CPI, but the CPI was in line with expectations, and that means that the Federal Reserve is going to be able to continue with their plans to reduce interest rates and free the money up. That means interest rates are going to go lower, so the treasuries rise, and that means more money available to buy stocks with, and so equities go up as well, and that's when they are positively correlated, right? And if it had been high and everybody's like, oh no, inflation's coming back, and the treasuries were selling, and you'd see the ES selling as well, right? Now, the split of this is, if the thing that is primarily moving the markets, rather than, and this is kind of like a really fine distinction that I'm going to draw here for you, right? If the primary thing that's moving markets is concerns that we're moving into a recession, then it's different. Because if we're moving into a recession, then you would think, oh, okay, they are going to lower interest rates, and that means that the Treasury should buy. So shouldn't that mean more money available and they will buy the equities as well? Well, that's the intention. That's there to kind of like stem the bleeding. But if we really think that we're actively falling into a recession, you're selling stocks to get out before the recession happens, you know? So when it's primarily about a recession, that's when you start to see opposite. Okay. Let's see. Your live action says I'm having a good start. Got good fills on buy stops on all notes this morning off of CPI. And a wee bit off, but I had the best move. The liquidity and low spillage on notes is the best thing. It really is. Like especially if you want to actively trade news releases, which I don't really do. Sometimes I do, but I've kind of had like mixed luck with that. It's really the best place to do it is the treasuries. They're economically sensitive, and there's actually liquidity there to do it. You know, like trading non-farms with ES is like crazy. The big one, when I tell you what, when they are oppositely correlated, that is, the treasuries are moving up and the equities market is moving down, those are the best trades in the treasuries, man. All the retail traders, all the index scalpers just get absolutely obliterated by this thing. Because it never just goes like this, okay? The S&P 500 doesn't do that, okay? It will go up like this. The S&P 500 loves to go up like this. But when it's going down, it's like, it's freaking everywhere, man. The volatility is so insane when the equity market is moving down. And meanwhile, the treasuries will just slowly move up and up and up and up and never take a step back. It's the easiest trade in the world when that's happening. It's the easiest trade in the world if you're able to see it early and get on board and you just buy the treasuries and you just hold it. And because I've been on that, I've caught that a few times, especially early on in my career. And I can remember going on Reddit and everybody complaining and talking about blowing their accounts and all of this sort of stuff. And I'm like, I just took one contract at the beginning and just sat and watched it all day. Like it's crazy. So in those situations, you'll be really glad that you have ZN in your back pocket, that you know how to trade it. The ES has changed a lot, and the intraday rotations can be tough. It really has. It's kind of funny because if I want to take a really quick trade, like I want to be in and out within 5 minutes, it seems to me that it's still like around 2 points is like the amount that you want to go for. Which is kind of what it was before. But overall, the S&P 500 is way more volatile than it was, pre-COVID, let's say. Need to hold my trades for less than 90 seconds. I get a better risk to reward. Oh, you know what? I'm thinking about that. When we were testing that yesterday, I was messing with that back test. What was the exit? It was just set targets, wasn't it? Random trade. Oh, there's not stops and targets. Oh, but I do use the stop and the reward factor. Yeah. I want it to be like a purely random trade, but it's not necessarily a purely random trade because the exits aren't random. The exits are set stops and targets, which kind of gives you random results. But like if I want to test the entry signal, then like one of the best ways to do that is to just say only be in it for 30 minutes or whatever. You hold it for 30 minutes and then whatever it is you exit, just for the back test. And that will give you a much better idea of like what alpha is in the entry signal itself. Because when you base it on a set stop and target, your results mostly become a factor of this set stop and target that really just show you the volatility of that instrument. Right? So you kind of do it two ways, right? So the one way that I just described, where you hold the position for a set amount of time instead, can tell you how much alpha there is in the signal. Specifically, it's not like necessarily telling you like, it's kind of telling you when you enter this, does it give you really big winners from it? Does that make sense? Right? It's like within 30 minutes, you know, I can compare two strategies and I can say, well, look at the number of trades that really went far on this one compared to the ones that went far on this one. This one, it doesn't look like it picks up really big alphas, but this one it does, right? So that's how you can compare that. And then on the other side, if you just enter in the trade at a random time, and then you can test your exit strategy. So you can isolate the exit strategy and see the performance of just the exit strategy. So that's why we have that random thing. Ledger and I've come to the same conclusion. Okay, so Segura, wait, hold on a second here. I want to make sure that I caught all of the earlier comments though. Yeah, okay. So he asks, what do you think about volume profile and the time in sales? It's interesting that you bring up time in sales. So if you look behind my face, I do have some time and sales windows. These are actually reconstructed tape, is what it is. So the time and sales that you get is actually a list of all of the limit orders getting filled. And so if you want to know what the market order actually was, you have to reconstruct it, and that's what these do. Okay. And I find those useful to get a sense of like what the pace of the market is. I mean, I do have them there, and I'll show you again. The ones on the bottom are filtered just to large orders, right? So I do kind of want to know when a really big market order comes through, but mostly it just kind of gives me the pace. Oh yeah, there you go. See, after a while it kind of clears through. So it kind of gives me, because what you'll notice is that like it's clustered. There's really strong clustering in the arrival time of market orders, right? Oh, I've never thought about random entries to test the performance of the exit strategy. That's really interesting, yeah. So I have that. What we need to do is test a couple of exit strategies and see if there is something on 1 minute period that actually does help. Maybe the exit strategy, you know, there's some magic we can pull out of that or something. I don't know. Anyways. Oh yeah, so time and sales, volume profile. Okay, so volume profile is a completely different beast. And I have a video, it's relatively recent. You go back like I think 3 videos ago, and I have a video called Improving Volume Profile, where I kind of go into that, okay? But I will give you like the abridged version here. The abridged version is that most of the people are trading volume profile, are using a theory called auction market theory. And auction market theory was a decent theory based on real observations that you can see on the volume profile and that you see when you start to organize the market by a profile. But the theory is ultimately incorrect. And it turns out that these behaviors occur because of some fundamental properties of the market itself. They're inefficiencies that are driven by the limit order book. Because auction market theory kind of posits that people see this certain area as value, and then, you know, they'll come in and trade it away from the value. And that's not what actually happens. That value area, that place where it rests, says absolutely nothing about the fundamental nature of the instrument, not the fundamental value of the instrument, sorry. Oh, I'm getting hiccups. It says nothing about the fundamental value of the instrument. It's just a kind of a random thing that happens because of the way that an order book works. Okay, so that's kind of like the key thing to understand, is that what really happens is it will just rest there if nobody's touching that. It can only go so far. And then if nobody's doing anything, it'll just sit there. And in order for us to have another move, you have to have somebody come in and push it the other way. And the liquidity needs of these large players is so great that when they come in and they do stuff, it moves the instrument. And that's what causes, you know, like what they call range extension up and down and all of those sorts of things, right? Okay. So when you take out all of this nonsense about fundamental value and everything, then you get something a little bit better. Now, there are a bunch of setups and situations that these people talk about with the volume profile. For instance, a popular one is if we open up below the previous day's value area low, then we come back into that area for more than 30 minutes, then there's a very high probability that we touch the previous day's point of control, for instance. Such statistics are actually kind of nonsense. That statistic that I just told you about, because if you go and you like put it into a spreadsheet and all of these sorts of things, you will probably find that actually, yes, it does touch the previous day's point of control like 60% of the time or something like that. But that stat is not really actually telling you anything fundamental about that there's something special about that point of control. It's just showing you the volatility of that instrument. It's like, oh, wow, the volatility tends to cluster. So if it was able to move away from that point yesterday, it's pretty likely to be able to move back to that point today. If it has the same amount of volatility, right? That's all that's telling you. And if you actually take those setups and you like back test them, you say, oh, okay, I'm going to buy or sell or whatever, you find that they don't have any edge to them. Okay, so be careful with some of the things that people tell you about volume profile, because they can give you statistics that are kind of useless. But there is like a real thing there. But just, I guess in general, I would be very weary about any kind of technical setup. Anything that people tell you, you come in and you put a chart up on an intraday time period, and when X thing happens, you enter, and when X thing happens, you exit. I would be very skeptical about any kind of setup that you ever see shared online, because it's extremely difficult to get a setup like that to work on an intraday time period. There's just so much noise that things like that that kind of an approach just doesn't work very well. And if there was an edge that really did work like that, you put it online, it's going to work. People are going to use it to make money, and they very quickly size out the edge and eliminate it, and it disappears, right? So avoid looking for setups. We can do this kind of testing, like we're talking about the back testing. So when I do the back testing, I don't really expect to, okay, here's my entry conditions and here's my exit conditions, and this is going to have a strategy that works really good. I don't expect that to happen. But what I do expect to happen is, oh, hey, if I do my data science correctly enough, I can show that maybe there is a slight advantage to it. And then I might be able to combine it with a lot of other things that I know, is particularly things that I know about the current market. And that's kind of the thing, is that a technical edge is very, very difficult to find, but it can be very consistent. On the other hand, there is so much edge out there available within informational inefficiencies. It's obscene. But the issue is that, there's absolutely no guarantee. If you see that there's a flow to come through today, there's no guarantee that those people are actually going to trade, that those orders are actually going to come, right? And so those informational inefficiency or asymmetries, let's call it, informational asymmetries, are not as reliable. And that's kind of the trade-off that you have to make. And unfortunately for us as retail traders, the edge in kind of the really set mechanical setups has been mined out so hard that we basically have no choice but to go into the discretionary side, right? Right. Okay, what do you think about VWAP? So, the place where VWAP came from, hold on, I should drink some water here. Yeah, see, like your setup, I wait for it to reach the value area high or low, and I mean, we got some guys in our stream that are doing that, but I personally don't subscribe to it. I don't think that works that well. So like more broadly, the idea that we're going to get to a certain price level, and all of the sudden, like, market orders are going to appear because we got to that level I've never been able to find something that suggests that happens. I've seen it the opposite way, like that's what our inventory cost basis kind of does. So you come over here and you look at this, right? It's, I can't predict when the orders are going to come, but I can see that, like, the market makers, had something, well, maybe not market makers, but people had to puke their positions. And when you get to this level, that's a pretty good point at which they've all been washed out, essentially. So it's the opposite, right? This is a price level where the orders will cease, right? Anyways, VWAP, yes. VWAP. So where VWAP came from is before we had algorithms like Almgren Chris. So you have to execute a ton of something. How are you going to do that? How do you get yourself the best execution? And so they had these different algorithms. One of the algorithms was VWAP, and one of the algorithms was TWAP. So they would do a volume weighted average price, and they would buy a certain amount on a set schedule, but then if it went below the VWAP, you would buy even more, because that's giving you a better than average price on a volume adjusted basis. And they did that for a very long time. Like, that's what they would do in the 70s. Okay. And kind of what happened was all of the floor traders figured out that this is what they were doing and started to watch the VWAP. And it became a thing. So, yeah, you will definitely see something to that will come back to the VWAP, and there will be kind of a battle, right? Like I kind of think that when you come to a VWAP, that there's like different large players out there looking to kind of move the market their way during the day, and the VWAP is like one of the key areas where they like decide to get involved and try to do things, right? But from my perspective, that kind of makes it an area that I want to avoid, because I don't know who's going to win that battle, right? So the idea that we come to the VWAP or whatever, and that's going to like predict that we're going to bounce there or that we're going to go through there or something like that. I've gone in, I've done back testing on the VWAP and tested all sorts of setups like that. And again, it wasn't profitable. It wasn't a good strategy. Okay. So all of the retail traders kind of figured out that that's what was happening with the VWAP and kind of started to screw over the big institutions. And that's why the institutions were looking really heavily for alternative ways to do things. And the big one that came along was Almgren Chris, is that they realized that if they just minimize their impact on the order book, that is like one of the most, that's like the most important thing. That and like how risky of a trade is it going to be, and do you expect the market to be like trending one way or the other during your execution? Those are like the most important things. And they found that they got a better execution from doing that stuff than they did from looking at the VWAP. So in my opinion, VWAP is actually kind of antiquated. I don't think that as many large institutions are playing at VWAP and using the VWAP as they did. And I'm saying this as somebody that was heavily focused on VWAP at the beginning of my trading. I was very heavily focused on VWAP. And kind of what happened was I got to a point where I was able to back test it, and I found that it wasn't really very effective. Or at least the way that I was trying to use it wasn't very effective. So how do you trade right now? So let me go back to this. So we're having a conversation with people in another chat room the other day, and they wanted to know how I was trading, and I had already just told them, and they didn't realize it, and I don't know. I tell you what, again, I have a good audience. I don't have any problem helping you guys understand this, but some people out there, and I hate to say it, but it's true. A lot of retail day traders are stupid. Really are. You know, you guys are really smart. You found this stream. You're probably a little bit smarter than the average retail day trader, but there are a lot of people that are just clueless rubes out there, right? Okay, but let me try and explain it in detail, because maybe I just did a bad job of explaining it to them, you know? So I have a notepad down in here. And what I do is I kind of come in and I ask myself, okay, what are some things that I know about that might help me predict orders that will come through that day? So today is Wednesday, and there tends to be more activities on Wednesday because it's like they can't do it Monday, Tuesday because they're still kind of like planning. And it takes 2 days for them to kind of like make all of the decisions and pull the trigger. And so things happen on Wednesday. So you see more activity midweek. Unless they already knew and they were ready to go outside the gate. So that's why Monday is kind of like, the volatility on Monday tends to be less. But when you do have high volatility, those ones are more volatile than the other ones. Interesting. Right. So there's a stat that we have that can kind of help us determine the flows. This is especially true in prop firm. It is. Yeah, it's the prop firms are really trying to appeal to the lowest common denominator. Anyways, okay, so we had a CPI. CPI is definitely a buy, but that was kind of like a big initial buy, and some people kind of getting pushed out of a position. They did push a little bit higher, but I don't know, they didn't get too much from it. I can still see 110 even being a good target, but maybe they don't get that until tomorrow. So I kind of feel like that the flows that we should expect from CPI are already mostly through. Okay, now there's the Trump trade. Now the Trump trade has been pretty persistent, but what we had here this morning kind of like screwed the Trump trade up. So I don't think that those guys are necessarily involved in here. There is still momentum involved, but when you have a momentum, they're not adding new positions. What you could see is maybe when you have like a systemic sell on something, it's like you'll have that tendency to go down. It'll tend to do this. It'll go down and then spike up really quickly, and go down and spike up really quickly, right? Because it's like all of these people that are short keep getting like stopped out of their positions trying to get in line with the trend, right? Okay. So those are a couple of things that we can potentially use to predict future orders. You might know something about, there's a PPI coming tomorrow, and the PPI is actually likely to show higher than expected inflation. I'm not saying that it is. I think it's probably going to be in line, but let's just say that it did, right? That might be something that you might be able to use to predict flows that not everybody in the market knows, right? So I especially want to put something down in that list, things that I don't think everybody knows about, right? And, you do read a lot of research reports and know what's going on in the market, the more flows that you might be able to potentially identify, okay? And then what I do is I add all of those flows together, and if I see a clear imbalance, I say this is a buy, and this thing is a sell, and this thing is a buy, and this thing is a buy. But I add them all together, and that says there's actually going to be a pretty big imbalance on the buy side, then that means I want to come in here and buy. So I'm kind of coming in with some sort of a bias. And the bias might not necessarily even just be we're going to buy or we're going to sell. It might be, hey, we're not going to have a lot of activity today, or we are going to have a lot of activity, but it might not be very directional. We might like move back and forth across a range a lot, right? And I'm using these flows to determine that. Okay. Once I have that, then I'm coming in and I'm watching the order book, and I'm doing two things. One, I'm looking for some things that might help me optimize my entries and exits. So if there is a place where you can catch the edge, or there is an iceberg order, which side of this has more orders at that time, those are all some things that can kind of help you decide in that moment what the best price to choose is, okay? So that's really a small thing. And then overall, I'm also looking for confirmations that my predictions of the order flow are correct. So if I am expecting to see a really large imbalance in favor of buyers, then what I should see over here is I should see market orders buying. And when I come in and I look at my indicator right here, my market order imbalance, I should see, more than 50% buyers or less than 50% buyers. And especially if it's like at the 40% or the 60% level. Or another way of looking at it is you come over here and you have cumulative delta, and you can see, okay, the cumulative delta is persistently moving up. That means that there's a large meta order buy out there, just as I predicted. Or now what we're getting is a pretty large meta order sell. By the way, they're coming back to that 23, so we might want to take a look at that when it gets there. Okay. And I'm also, if I have a prediction or there's going to be an imbalance in favor of buyers or sellers or whatever, I also want to do my best to try and quantify that. And the way that I will try to quantify it is in terms of changing cumulative delta. So I'll come in and I'll say, because of the news and the things that are coming on, I expect there to be an imbalance of like 20,000 contracts or something like that. Like, that's reasonable for today. Hey, that's what we did. We did like 20, 30,000 contracts. That means once we get there, once we get to that 30,000, I'm going to be watching the DOM again for, an optimal place to get out. Because the flow that I was expecting came, so I'm done. Right? So that is essentially the gist of how I'm trading. Okay? But the really, really abridged version is I'm primarily relying on informational asymmetries. Things that I know that I don't think are priced into the markets. And I'm explicitly ignoring all of these indications that people try to use that are based on the price history. I do not take an entry because, price moved in a certain pattern, or we've come to a price that they were at in the past, or anything like that. I do have my inventory cost basis, but that's not really based on price history. That's based on where market makers took bills, right? Oh my gosh, is it already bouncing? You've got it. This is just... That's crazy, man. It went through that, and it's bouncing so quickly. Still not done yet, so let's like give it a little bit of time before we claim victory on it. You know, I'm not taking a trade on it, of course, so... Okay, so that was how do you trade right now? Okay, a live action says, friend called me the other day and said he knows a guy that claims his algo makes him 20K a pop. Man. You know what? I see all sorts of extravagant claims these days, and you know, a lot of them I'm kind of skeptical about. Taguro says, I learned how to trade from no BS day trading, but now I can't trade bonds on Apex. Well, you know what, Seguro? That's probably for the best. But the combines aren't really helping you guys. Do we have to go on our daily anti-prop firm rant now? Yeah, I think it's time. So some of the rules that they put in there, and especially the profit targets that you're trying to reach, are really kind of harm you. Basically, the prop firms kind of herd you towards strategies that aren't going to have a lot of efficacy in the long term. So you're really better off funding your own account and just trading super small. Like, this is kind of the thing that red pilled me about it. Was I tried the combine a bunch of times and it wasn't really working out. And the thing that irked me was when I started to look at it, I was like, well, the amount that's available to me for what I'm trying to do just isn't enough to reach that profit target in a reasonable amount of time. So what do I do? You just don't trade the combine. You start your own account and you trade that really conservatively. And instead of trying to double that account every month, you're just trying to maybe make 20% on that account over the year. Way smaller target, right? And you will trade so much better that way. Because trying to reach those targets is what's screwing most people over. I think that's probably especially true in the Treasury space. You know, over here in ES, a lot of that is just luck of the draw, honestly, so... Live action says Trump is really taking the bull by the horns. Biden tripping on the beach and Trump is everywhere at once. Well, you know, they had been saying that Donald Trump was putting his own money in to develop a transition team before the transition team that's set up by the federal government would be in place, and that they've been working on who they're going to pick for a long time because they didn't feel that they picked really good people the first time around. And so he's been putting his picks out, and that's been interesting to say the least. Did you try? I have not tried the 01. Well, I tried like the 01, but not like the whole thing that like talks to you. Like it talks to you and it can hear your voice and everything. I never tried that. You know, I could, you know, pay the monthly fee to try it out and everything, but you know, I'm trying to keep my costs down right now, so I don't know. It's frustrating, you know, I want to take on more risks and all of those sorts of things, but this job market is brutal. I don't know how long this is going to last, and so it's really not a very wise thing for me to take big risks right now. So I'm trying to, with the free time that I have, try and build the YouTube channel up as much as I can in that time. I don't know if it's, you know, really gonna move the needle. The last video that we made was pretty good. We're making a video about prop firms next, which is basically me ranting about prop firms. We'll see how that does. I'm, you know. Oh yeah. I totally, dude. Thank you for reminding me again. Live action. Yeah, so I definitely do not see your comment. YouTube probably auto filtered it because of the link. Just post the link here. Wait, you're saying the jobs numbers are, oh dude, it's totally, well, it's not that the jobs numbers are false. They're a little bit deceptive. People are just looking at like the headline number and saying, oh, this is such a strong economy. And when you actually go down into the crosstabs and you look at things, you realize that like all of the growth has come from government jobs. So basically like the economy is doing terrible and they're pumping those numbers up by adding government jobs. But the private sector and the white collar jobs in the private sector in particular is basically a recession. It's very difficult to get a white collar job right now. Like you'll probably get a job, but it's going to take you more time than it would and those things. So wouldn't surprise me with the way that things are going. I mean, with the way that things are going, I could get a job offer tomorrow. Okay. But it wouldn't surprise me if we find ourselves January, maybe even March and still be looking. Which is a little scary to think about, but that's what I'm preparing myself for. Yeah, anyways, just post the link here in this chat live action because I don't see it. I'm going to come in here to community. Where are the ones that are held? No, it doesn't show any held comments. Okay, he's got the link. It's a little short. You know, I think that there is some truth to that. But you know why I think that people's performance on demo tends to be better than their performance on live? Everybody says, you know, it's like the psychology and the market reacts to you, so that's also a factor. But I think that the biggest factor is that they end up taking less risk on their live trades. Every backtest that I've ever done has kind of come back to the point that like the best stop is no stop. You make more money if you have no stop and you just try and let it go your way as far as possible. You make more money from taking on more risk. It's just that simple. So that's where, again, coming back to the prop firms, like the daily loss limit that they give you is kind of a limiting factor on the types of strategies that you can use. You say you think about it and you say, oh, well, but I can come in and I can only trade one ES contract and, you know, the market has to go really far against me to make me take $1,000 loss, right? Well, yes and no. Because if you're taking one full ES contract, you can make or lose more than $1,000 easily, pretty much every day. The volatility is more than that. And you could take micro contracts, but then you're trading 1/10 the size. That means that it's going to take you 10 times more time in trades to actually pass the combine, right? That's why, again, what am I saying? Fund your own account and trade that very, very conservatively. So you can come in and make $1,000 account or a $2,000 account, let's say, so that you have the same drawdown as the combine gives you, right? So you have a $2,000 account, and then just come in and trade micro treasuries or trade micro ES. Sure, trade micro ES, and you know what? And an account like that, you could potentially hold, a contract in a really bad move, and still be okay, right? But the whole point is to be able to have a wider stop, like increase your stop. It generally tends to improve your performance. Like that's what it really comes down to. If the election brought you 10K off one contract, it was a George Soros type trade when he, it was a pretty big move on election night, wasn't it? But there, you ask yourself, why do they have like different numbers on different sizes of combine, right? Okay, you want to be able to take more intraday volatility than $1,000. Then just go and buy the larger combine account. But then you'll say, oh no, but the target, they have an even higher target relative to your drawdown on those ones, and so your probability of passing that larger combine is even worse. Even though why do they do that? Because they have to compensate for your ability to take a larger stop with the larger daily loss limit. Basically, every rule that they have in those combines, you can look at that rule and ask yourself, well, what if I try to design a strategy that I think would be profitable, but like explicitly breaks that rule? And that will lead you to some of the more viable strategies in the future space. Like the easy one is just being able to hold overnight. If you can hold overnight, you can swing trade it, then it's a completely different ballgame. Then you can do momentum, and momentum is an actually proven profitable strategy. Not doing so well recently, but it is a thing, and there's a lot of people making money off of momentum. That's a professional strategy that you could potentially do. Like a combine could potentially, a funded trader firm could potentially fund that kind of a strategy, and yet none of them have a setup that would allow you to do that. I wonder why. Daily loss limit, we kind of already talked about that. Okay, what about the drawdown to target ratio? Well, they're in a momentum strategy. Well, my strategy, like you look at my ZN trading, I would break the drawdown, even though it's been, relatively successful. The amount of volatility in the returns is just higher than what they want. But you can actually build a more long-term consistent strategy by explicitly having a strategy that has more variability in it. Get what I'm saying? Firm doesn't help you. And then it's kind of weird that they just decided to like ban all interest rate products, but like whatever. Okay, what was that? So we've been down here. We bounced at this spot before, but that time somebody like stopped out of a position. So that was a little curious. I tried to be a little bit more focused on the market today. Well, I don't know if I've been as focused on the market as much as I have been on market concepts because you guys have been asking the questions, so that's good. I understand that such a high percentage of futures prop firm traders never get a payout, but how is it possible that a system where there is no limit on the upside and the downside is only 149 combine fee and 149 activation fee? Well, basically what happens is they come in, and so if you take the evaluation, say combine, we should really call them evaluations because Top Step has a trademark on combine, trading combine, apparently. Okay. If you take an evaluation and your target is 3,000 and your maximum drawdown is 2,000, you can basically just look at the ratio between those two things to determine your probability of passing. So basically it's 33%. It's 1/3% chance that you pass it, just based on those rules. Okay. So that means your average retail trader is going to try at least 3 times before they pass it. You should be able to take it 3 times and pass it in one of those 3 times. If you have a strategy that's like reasonably viable. My understanding is that most people, they don't do that. That they try it several times before they're able to pass it. So they actually perform worse than random, which is wild, right? Okay. And then they do pass the combine. They still have to pay a monthly fee to have the account. Then they blow the account and they go back into paying combines. And the issue is like if okay, they almost always have 2 steps. There's only two that I know of that you pass the combine and then you're on a live account, which is how you would think it would go, right? But no, almost every one of them has like a 2-step process. Like to get to a live account, you have to pass the combine twice, essentially. So now you're basically saying 1 in 9, or let's round it to 1 in 10. Okay, 1 in 10. Okay, so for every one person that passes the combine or passes the evaluation and gets a payout, 10 people. So $1,500. They took in $1,500 for every one person that takes the combine. And then like they'll come in and they'll take a payout on 1 month and then they blow the account and then they're back in there again, right? So as long as that 1 in 10 guys that gets funded isn't making more than $1,500 that they have to pay out of their own pocket, that the prop firm has to pay out of their own pocket, they're making money. Okay? And then scale it by tens of thousands, because these places are apparently bringing in tens of thousands of people, and they're doing it every month. And yes, it adds up to millions of dollars a year. So when you look at the numbers of it, it actually makes a lot of sense. So in the video that I'm making, I have a Monte Carlo simulation that kind of you can use to show how many people will pass the combine. But from this fast track trading fiasco, one of the things that they talk about in their chat is that they made a Monte Carlo simulation to simulate how many traders would fail so that they knew where to set their numbers and everything to make money, and they knew how much money they would make. I saw some stats on turnover in these prop firms. It was ridiculous. It really is. TopStep doesn't have a monthly fee in the express funded account. You have to pay for data. I'm pretty sure you pay for data. There's some other things. So there's other things that get more interesting, like one thing that they catch you with is that there's like a fee for you to switch over to the funded account. So you're actually paying more than you expect, but you pay it on the back end instead of the front end. Oh yeah, no. The $39 a month is yeah. Well, but what is it that they take out? So if you're funded, you're gonna have to pay $39, $40 a month or so for the data. Yes, maybe that just comes out of the account itself, and you don't have to pay that directly. Maybe. But then, and you have to pay the professional fee, but I don't think that you pay that to them. Is that it? Did they not charge you anything more? So now there's a couple of other things that kind of all end up being kind of like sweeteners for them. Okay. Like when you're looking at that kind of setup, we're just assuming that, okay, for every 10 people that fail, there's one person that makes money. Okay. Well, we're kind of assuming that every person that fails the combine does so within a month. But that's not the case. Most people probably, whether they pass or fail, have the combine going for 2 months. So now you have to double all of those numbers, right? Now it's actually for every one trader that gets funded, they probably bring in $3,000, right? Oh, and then there's those people that really just fail over and over and over and over again, and they pay reset fees, they buy multiple combines, multiple evaluations, all of these things, like it adds up so quick. And then when you have thousands of people doing that, thousands of dollars that are coming in, man. Thousands. You're talking about 1,000 times 1,000 at that point. Years ago when I was live funded, it was around 120 or so a month. Okay, so they are pulling in a little bit from. Seguro says, you like any other day trader on YouTube? I really don't. I especially not live streams. I have not come across another live stream that I was like, yeah, this person knows what they're doing. They're teaching good stuff. I would really like to collaborate with this person, etc., etc. Every time that I'm sitting there being like, let's try and be nice and yada, 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 you know, I find like they start shit. They say stupid things. Listen, it's really a Seth problem, right? You can't come in and tell people that everything that they know about trading and everything that they've basically built their personality on, because that's the way that people tend to do it. It just is. You can't tell them that it's all nonsense. They don't like that. I understand that. I'm not necessarily trying to get everybody to like me. See, my larger strategy, not my trading strategy, but my larger strategy is underground. It's like Fight Club, okay? I'm not going out there trying to tell everybody about it. You come in and you do good work and you keep it under wraps until it's so good that like it just can't be denied anymore and it explodes on its own. It gets popular on its own without you having to, like desperately beg everybody for views every day. Right? And in that situation, I don't want everybody. I just want the people that are interested in an empirical approach to day trading. And that are, I guess the other part of it is an empirical approach to day trading, and that they want to fund their own account. And probably you want to trade treasuries too. And that's who I'm interested in. And the gamblers and the people that are really just trying to get the most affiliate links from prop firms, and they can have the rest of them. I don't want them. The only one I like is No BS. Well, I really do like No BS day trading. I feel like that what I provide to you guys is like kind of extends or complements his work. But I don't know if I would really call him like, you know, he doesn't have a live stream this every day. He has his little series that he does like once a quarter or whatever. That's a lot of money, but hey, you know, more power to him, it works, whatever. It's you know, people should be able to provide services. You know, I think that there are some people out there that would say, if you've got a creator or they're a trader or whatever the deal is, that they shouldn't be providing any services whatsoever, right? If they're such a great trader, then they would just be living off of the trading and they wouldn't have a course or whatever the deal is. Okay, maybe there's some truth to that, but a part of it is that you could be a profitable trader and you're doing pretty well. Chances are that if you are one of those traders that actually are pulling something from it, you're not pulling that much, right? The lower you set your expectations, the more likely you are to get to it, right? And being kind of cautious and just going for what's available is, you know, more likely to lead you to the profitability than, you know, really YOLOing and trying to be the millionaire and everything, right? So first of all, the guy that you would want to learn from probably isn't making enough income from it just to live off of it, right? But then number two, okay, so then there just won't be any content for you. Is that what you want? You just don't want any content? They have to be able to, you know, justify making the content and have resources to be able to make good content for you. It's somehow, okay? That's what we've been able to do on this channel. I don't think that 16,000 subscribers is that big of a deal. When I tell people in real life, oh yeah, you know, I have a YouTube, like it's a big part of me. So when they're talking to me, they kind of do have to understand that to understand some of the things that why I might say certain things and come from certain approaches, right? And they're always like, oh, so you have your whole own empire and everything like that. Well, no, it's a tiny little stream with 16,000 subscribers. It's super tiny in YouTube terms. It's super tiny, but we have affiliate links for Jigsaw and we get advertising. Oh, and also for the News Squawk, and we've been able to buy really good equipment and all of that so that we can make top-notch quality content because of those things. So creators should be able to make money from being a creator. They should be able to make money from having affiliate links. The issue is just the thing that they're selling you should have value. And I do not take creators seriously that are selling junk. And I cannot take creators seriously that have these prop firm affiliate links, especially not the people that have like, you know, 12 of them. And they have like alerts in their Discord every day and a video every day about which prop firm to trade. What a joke. And there's more than one of these kinds of guys out there that are really like just as desperate as possible to make money from prop firm affiliate links. And it's disgusting to me. It's disgusting. It's laughable. These people are out there, but they're out there and they seem to do pretty okay. And it's sad to me. Again, going back to the thing we were talking about earlier, I might have to, you know, focus on the day job and not be able to live stream anymore. That might happen. And then where are you gonna go? Well, hopefully Uzi's gonna start. Uzi and who was it that was saying they would take it up? AO and Uzi will start the stream for us. They will carry it on for us so that you don't have to go and watch these people that are really just trying to coerce you into doing prop firm. I don't know if I can trade his strategy on ES, says Seguro. I think you're referring to the no BS day trading sort of thing. Well, so you come over here and you watch Zian, and you learn order flow over on ZN, and then you can then kind of adapt it to ES. So there are things you can see in the order flow. Seeing the order flow in ES is useful, but it's really hard. The issue with ES is not just that it's harder to read the order flow and it's faster and it's more volatile. There's more factors that you have to consider as well. There are so many different things going on over there that people are arbitraging against and hedging with these ES futures that it's just really hard for a retail trader to disentangle all of those different factors and come up with a good prediction for what the future order flow is going to be in ES. I think probably the best thing to do in ES is you're the sniper. Like, you maybe only take a few trades a month, but you're taking the trades in those situations where it's really clear that the index is going to move, and you just ride it for all it's worth. That's not a strategy that would pass a funded trader evaluation, but it's probably on ES, in my opinion, the best strategy available to you as a retail trader. I think that you would probably want to have like a $10,000 account to do that, but have a $10,000 account. Try and make $150 a month. Because, you have to pay for the fees. $50 for the fees. You make $100 a month. That means that at the end of the year, you'll have made $12,000. Did I say that right? No. You'll have made $1,200. You'll have made $1,200. And guess what? That's like a 12% gain on the year. That's respectable. Do you think that once a month you can identify a trade in ES that's worth $150? Especially if you hold it for multiple days. Yeah, I think you can. Now here's another thing though. Why just focus on ES? Like, the thing that I see about ES is that there's just so much more randomness in that thing than anything else. So there might be some benefits to that for market making purposes, I suppose. But why not just trade everything at that point? Why not just have all of the major instruments up there and look for the one that's popping off and trade the one that's popping off today? I can't wait. What a great move I made selling my business that makes $5K an hour to do this. Wait, what? What are you talking about? You sold a business that made $5K an hour? Really? Why would you sell that? To trade. Why would you sell that to trade? Okay. I'm just sitting here like, if I had a business that made $5K an hour, there's no way in hell I would ever sell it. Maybe the 5K was he says oops. I don't know. True. I don't know, man. Keep the business maybe do the trading as a side hustle, but sometimes I wonder to myself, it's like, I do love trading. We've had some good success with our YouTube channel here. We've had some good success with my trading over the past 2 years. But, you know, I'm not making a full-time living from it. I would really love to have something that's mine that I make a full-time living from. And, you know, I have employees and I'm managing other people and that sort of a thing. So, but, you know, I want to keep trading. I want to keep coming in here every day and talking to you guys and trying to learn more about it and sort things out and continuing to learn more about the markets and following in on what's going on every day, right? And I wonder to myself, how much of that is actually I truly enjoy it versus a person's natural tendency to like double down on sunken costs. You know? It's like, yeah, we've had some success, but why not just say, yeah, that's probably not a whole lot more to it. Let's rest, you know, let's give that one a rest and go and do something else. I like that idea actually does sound appealing to me. Like, let's take a risk and start a different business. And there's other things that we can do, and I have other skills that we can take advantage of. And I can go in and pick something where I don't have to be pitted against everybody, right? Because it's just a little frustrating being a creator in a field where everybody believes nonsense, you know? But then I'm like, but then the problem is, what would that thing be? What would that I don't know what that thing would be. And so I just kind of forget about it. Octavius, time for the talk. I'm thinking about trading Bitcoin. Talk me out of it. And what is the best instrument to day trade it? Ooh, boy, Octavius. Well, so first of all, there are futures instruments on the CME. There's like multiple ones now, and even I think micro instruments for it. The intraday volatility of Bitcoin is insane, though. So I like trying to day trade Bitcoin. Excuse me. Trying to day trade Bitcoin doesn't work out very well. You basically just end up taking on more volatility. You're gonna do Bitcoin, the way to do it is buy and hold, man. Just buy and hold. Kind of seems to me, with the way things are going in the Trump administration, as long as somebody doesn't prosecute Tether, that it will continue going up. So just buy and hold it. And waste your time on something else. What do you think about these people who are only aiming to make $100 a day, but across 20 prop? Why? I mean, you can't say only aiming to make $100 a day, because I just told you, hey, what if you had a $10,000 account and you made $150 a month, and then $50 went out into fees and things like that, and then the $100 were your profits. And then you add that up over 10 months, you have $1,000, and that's a 10% gain on that amount of cash over the year. That's a good trade. And you're telling me only $100 a day? It's like, right? Like, you realize that that's actually how aggressive that actually is. If you just come back and say, okay, like, what is the maximum that the account can draw? Like, what is 100% for the account? Because for a prop firm, 100% is the maximum drawdown for you, essentially. They say that it's a 50K combine, but the real, you know, they only let you trade so many contracts. The real equivalent to it really is a $2,000, $3,000 account. that you funded yourself. Okay. So just ask yourself, what would 10% a year on that be? And realize that like the best funds out there have trouble beating 10% in a year. And that will give you a good idea of how leveraged you're actually talking about. You want to make $100 a day like that. You're probably starting to talk about like, you know, $100,000 account if you were funding it yourself. To be like this to match the performance that a typical hedge fund manager does, right? So I'm not saying that you can't trade more aggressively, just realize how aggressive that is. And the more aggressive you're trading, the more likely you are to blow up. Have you ever Matthias asks, have you ever tried trading the agricultural instruments? You know, I've definitely never live traded them. I am kind of thinking here, like, you know what, Seth? Like, you should just, like, switch between instruments. That would be, you know, the experiment that I've been doing for a while in ZN has been kind of like sorting out a position. I feel like I still have some work to do on that. But I'm also kind of getting bored. The thing that would be more interesting is trade everything. Identify the instrument that I think has the most opportunity that day and trade that. And you know, doing corn and wheat and all that would be one place I would want to be looking at. It sounds so simple to Belligerent says it sounds so simple to only get 5 NQ points per day, but like you say, it's surprisingly difficult. No. Start with corn, yeah. Corn, I agree. I think corn would be the place. So like, that's my watch list over here. This market analyzer. So all of the things on this market analyzer are instruments that I think, you know, are potential places to trade. I guess there are potential places to trade, but I also think of them as like, this is more of a position trade thing, like holding positions for multiple days and things like that. So it's really is a momentum strategy. So we're back to, Seth, what you really want to do is you want to trade a momentum portfolio is what you really want to do, isn't it? I think so. I just need to spend more time with that. Maybe some more time back testing and stuff. So, like, I'm coming back over to my, my to-do list. Do I have one? No. Okay. I think that I did this. Right? Prop firms are for suckers. In fact, I think I will record that today. Or rather, I was considering trying to record that today. We'll see if I have the time or not. Okay, there was some podcasts that I wanted to listen to. There's another script that I gotta do. I want to put this up here. And then there's also these. Yeah. Really what I should be doing with this is I should have some categories. Okay. read link. Good grief. There. And then on my personal, on my Seth's career side, the focus is reading more Kubernetes stuff. I've been, you know, I don't feel like I perform with Kubernetes as well as I want. Like, I feel like I can do anything that I need to do in it, but you know, I'm gonna have to look things up and all of that sort of thing. Like, I don't have as much experience built up in it as I need to in the role that I'm, you know, been in. And I've had a hard time finding like resources that really give me everything is like from the perspective of a newbie, right? I really need something that's like more of a deep dive, so where I'm memorizing the syntax and I know how all these different concepts, you know, I can just write them straight out. That's what I would prefer. How would you go about creating an algorithmic long-term momentum strat for instruments? So I made a video, it's like 2 videos back, about momentum, how momentum really works, and I basically talk about that. And there's a book that you can go and get that does that, and that's where I have down there, like, let's do the back testing on it. I know that the let's YOLO on ES1, but in order for me to YOLO on ES, I need you guys' help on, you know, something to try, because I'm not motivated to do it, but I am motivated for the portfolio strategy things. I have things that I want to try on them, so I'm gonna go that way. And if you have a you know, something to try on ES, maybe something to do with the open, for instance, might be an interesting place to look. We can talk about it and we can start to look at it. Oh, this guy has a YouTube channel that is just grain markets and other stuff. That's interesting, I guess. Wow, and he really is talking about grains. These videos here he's got. Soybean estimates. He's talking about the numbers on these things. Like, this seems like a guy that, like, came from a real commodities background. That's cool. And most of his information is about, like, current ongoing things and issues and stuff. I don't really see any kind of technical analysis on here at all. I'm impressed. This is the first one that you guys have shown me that I've kind of been like, after looking at it, I'm like, oh, I'm really actually gonna look into this one more. That's pretty cool. I think that's cool because I've been interested in more stuff like that, I guess you could say. I've never been able to find it, so I'm gonna take a look at that. I was browsing a couple of things and I saw something out of the corner of my eye. And I was just like, what? Okay, let's look at this video. Hey. Our video about order flow had a bump yesterday. An unusual bump in activity. Wow. It's like the algorithm picked it up for some reason. Is it because of engagement? So my performance on this on engagement seems typical. Maybe when you did you guys go and just like put that video on repeat yesterday like you were talking about? Maybe that would do it. Maybe it's just random. That's good. That's really good. That's not the first time that that's happened, but I'm really happy that happened. I wish that I could have gotten that for the index funds video, but you know, I guess it's too dry of a subject. Belligerent says I watched it twice. Ah, it's my boy. Guys, I have the best audience. I really do. There'll be some other influencer out there you're hearing me talk about. Yeah, you know, there are a lot of people in the day trading space that just aren't too bright. But like really, like we're comparing them to you guys that are here every day. Of course, they're not gonna match up. I just have such a great audience. I really do. That's interesting, the way that it kind of did that, though. I mean, it's kind of like what you would like to see. I think what you would like to see is, okay, so it went up like this, and then it went up like this, and you'd want to see it continue doing that, right? So instead, it looks like it got a bump that was maybe temporary. But my understanding is that what can happen is it can come in waves, and then like over the life of this kind of means that YouTube will push this video out more. And so over the life of the video, it's gonna result in a lot more views over the life of that video. So that's good. Okay, well, you know what? By the way, I think I have to take an L on this today because I said, okay, that was a pretty big move. It was a bit more than I was expecting. Maybe it will come back. Kind of think that they're gonna mess around in this area for a while. They might be able to, they might go for 10, but I don't know if they'll be able to do that today. But I think that the least likely thing will be basically what happened. They retraced almost the whole thing now. And they are on the sell side again. So the CPI was good, but the Trump trade is, the sell treasuries because of Donald Trump is still on? Maybe? I don't know. Well, I have a whole list of things. So on it, backtesting like things in NinjaTrader, there's like Kevin's stuff. I wanted to go and try that over and see if my results were the same as his. So he'd done a lot more work on what's the best way to exit, which I've never really done. So, like that's one thing that I should be looking at. There's a couple of algos and stuff that I need to get, but we should also be doing the portfolio strategy thing. And if we come back to my list here, another thing that's on this list is watch videos about fast track trading collapse. And then I'm going to have more general ones. Work on CPI and bank testing. Work on scripts. Read. Okay. I can only potentially do 2 a day. So probably, well, 3 a day. 3 a day, maybe 2 if there's like an interview or something like that. But I don't think I have any interviews scheduled today, right? Let's see, I had these guys, we kind of had got off filter. Now it doesn't show up. It doesn't show up for some reason. Let's see, maybe it's just been sent. No, I don't see it. Interesting. I don't have to look into that. It seems like they sent me a calendar invite. It's not showing up, but that one's tomorrow. So I should be able to do 3 things today. One of them is going to be recording. So then probably the other 2 should be, well, and I think I should read every day. So then maybe it should be 2. So I should. Now, what do I want to do on the reading? Do I want to read more Kubernetes stuff? Well, I just don't have a book on that. So let's do a little bit of reading on More Money Than God. So do More Money Than God. I will watch these videos about fast track trading, and I will try to record. My voice sounds pretty good now. It's not perfect, but I think it's pretty okay. So I should try and record that other video. I guess I will do that immediately after this. Because if I don't have an interview today, then this will be an optimal. And plus, the kids are probably going to sleep in. My wife's probably going to let them sleep in. Okay. 3 time boxes, I think we're good. I must have done something weird with the way that it's set up. There's not, that one's not getting through. It's weird. S&P 500 is doing some interesting things here. So you know what? I'm seeing this again. I'm wondering how big of a deal this actually is. So these resting orders, you know, like it seems like that when you get a strong trend that you see those offers stacked behind it for some reason. So kind of seems to me that the trend of these is an effective filter. I just found Fat Cat. Do you? Yeah. You know what? Like Fat Cat's videos are just too long for me, man. Doesn't seems like a lot of people have told me like, oh well, he kind of uses order flow and think, but from like what I was saying, it kind of seems like he doesn't use order flow. That he is actually a price action trader. I'm not a fan of price action, man. I am not a fan of price action. Again, like give me a price action setup that I can backtest and we see that it works. But I've never been able to find that. I'm seeing a huge. Can you see it here on my chart here? It's like all of a sudden there's a huge uptick in the amount of activity in the Treasury market. What's with that? And I didn't pick up on any of the Fed speakers saying anything significant, so. Well, maybe it's this headline. Source close to German conservative leader Merz says the debt brake won't be changed for now. Yeah, a wee bit emotional? I think he just... my way of doing things is really information dense, right? I try to make it as informationally dense as possible because I think that, you know, that will keep the engagement up. But, I mean, it seems to me that, like, people watch his videos. So... I have such a hard time with this, guys. I really do. Because I would like to work with other people, but it's just I know how it comes out because it's going to come out. Oh, you're using price action. Well, there's no empirical evidence to suggest that there's anything to that at all. So why you waste your time with that? It's always going to be like that. Like you're just there's going to be something that we know that they're not going to like, right? As nice as we're trying to be to them. Two and fives are close to inverting? Well, one thing I am noticing is that there's some steepening happening here. The treasuries seem to have kind of like stemmed the bleeding for now. That like activity that we had was I look at price action to find liquidity. Okay. Easier on my. It's again like, but you know what I need, right? Like, I need some reason to think that there's going to be something to it. I need a piece of empirical evidence to latch onto. I need a piece of empirical evidence. I really do think that this a little extra volatility is because of the German debt brake not being changed, according to a conservative leader in Germany. Trump announces Dan Scavino as Deputy Chief of Staff. Oh, what's this from Nick Timorous? And how come this is not showing up over here? Oh, I'm getting a lot of stuff weird. Okay. Nick Timorous, an uncomfortably firm CPI print won't have made a December rate cut a closer call. Wait. Oh. An uncomfortably firm CPI print would have made a December rate cut a closer call that would have been trickier to communicate, but the number wasn't as bad as feared, removing an obstacle to a December cut. Here was Powell's characterization of the inflation forecast last week. Our on rents continuing to support sticky services inflation, that's just a catch-up problem. It's not really reflecting current inflationary pressures, it's reflecting past inflationary pressures. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path. That story is intact. 1 or 2 really good data months or bad data months aren't really going to change the pattern at this point now. Okay, so he is, Nick Timorous is kind of reinforcing that the trajectory is rate cuts, and it is happening. Well, I don't know why they're selling treasuries right now, but that's where they're at. Okay. Belligerent says, what exactly is price action trading? How would you describe that? And Live Action says, I can't trade. That's a funny one. Belligerent, is that just aligning yourself perfectly with current volatility? Yeah, no, so price action basically means doing technical analysis with a naked chart. Is basically what it is. You have a naked chart and you just look at the chart and you say, oh, I think it's over. You maybe have volume, but that's it. And they might have all number of setups and things that they look for. Doing this sort of thing with swings where you say, oh, it did this, and this is a lower high, so I want to go short, is really common. That's kind of, I would say that that's really common in price action strategies because retail traders don't know how to backtest that, but you can backtest it, and we've done so. Okay, Lewis, what's your plan for the long end of the curve post-election? Well, so I expect the long end of the curve to lag. So I think it's important to note here again, I just kind of only mentioned it in passing, but as we've started to have this like further move down, I do see some signs of steepening. So we steepened considerably here. So what is the steepening here? The steepening is we're going to normalize interest rates, right? So if we're bringing interest rates back down, we should expect interest rates to steepen. And now we're seeing them go steepen even further. But the overall treasuries are pointed down. The 30-year is going down more than the other ones. So it's not actually, so they're trading the spread like that they're going to normalize interest rates, but the outright direction is not resulting in lower interest rates. So that's kind of what's got me thinking that there must be some conflicting flows in the market here. That there's one flow that is mostly coming in on the spread, where they're steepening on expectations that the Federal Reserve will reduce interest rates, but that then there is another flow coming in short and keeping interest rates high, either because Donald Trump should result in higher interest rates, or because of this situation, like there's active measures that have to happen because of the fiscal situation in Europe right now. Right? So that's kind of what I'm thinking. But more broadly, I do have a position on in TLT. I am long TLT. I looked at these levels and I was like, oh, there might still be some downside yet, but this is looking like a pretty good price to pick things up. Apol says price action seems so insanely vague, of course. No wonder so many of them are price action traders, even when they're just doing random things. Yeah, exactly. I mean, it's been a long time, and this video was not one that really took off, but, I have a video about my thoughts on price action, right? To me, price action is just a marketing term. They picked a marketing term that's so generic and favorable sounding that nobody will try and question it. Oh, price action. Of course, the way that the action of price happens is something that matters and that you can trade off of. But then when you actually try and get into, okay, but let's take an empirical approach to day trading. Can we do some back tests? What kind of information do we have that suggests, or what kind of empirical information do we have that suggests that whatever methods you're using to try and read the quote-unquote price action actually has any of? And then you just get silence. So more power if you're doing it and it's working for you, and you've really looked at it over a long enough time period to feel confident about it, then go for it. But I need something more than that to waste my time with it, man. What's live action saying here? It's vague, so many different approaches. Try my approach. I think you'll have an epiphany moment. Market profile up with a bar chart. Remove the profiles to understand my way. Well, you have to be more specific than that too. I mean, look, I have a volume profile, and I'll go and I look at it, and I feel like when I look at a chart that I understand a lot about what's going on in that market, and I see all of the things that happened and everything. Is just that, like, still, how do I pull empirical information out of that? Let's see here. Belligerent says, I think this merits some thought, though. Thinking about this concept of price action, I know for a fact that Fat Cat makes a living trading full-time. Well, so I don't think that is necessarily something that you want to look at in terms of, like, should I do it, right? Because he may just be taking on risk, essentially, right? Like, and that's what a lot of these people are doing. And you don't actually know, like, how much he's actually making from that either. Right? And he might not actually know where it's coming from, what the edges come from, right? Like, there's just too many problems with that, right? I can't verify that. I can't verify that the edge is really coming from what he says it is. Like, there's all these problems with that. This is why it has to be empirical, right? And then on top of that, with with him in particular, it honestly seems like really difficult for me to sort out what he's even trying to do. You know, like, you guys have shown me videos and stuff, and what I see is like a lot of talking and like not really any information being conveyed. and certainly not enough information to actually, like, you know, build something up that we can derive empirical information from, right? If you follow top to verified traders, you'll find a common denominator in the approach. They take on risk. As I've never seen one of these people that people are claiming are profitable traders out there that are sharing their, you know, and yada yada yada. I've never seen one where they had something that showed me that, like, there was anything more to it than they're just taking, you know, wide stops and big risks and then not showing you when it blows up. Fat Cat seems genuine to me. Like he seems like an honest person. I don't know him that well, but just from watching his videos, he seems like an honest person. So if he is making money from it, and I don't know what kind of claims he's made, if he is making, I'm sure that he is, but that still doesn't give me a whole lot to work with here, right? Like, especially, I guess, especially since I'm kind of looking at this from the perspective of, I kind of want to just make a robot that trades ES, right? So, it gets even crazier when you get into Forex YouTubers. A lot of those are just straight up, yeah, it is. Well, honestly, there is a mass number of people in the futures trading space now that are pretty much just scammers, right? So there's like one or two like really popular guys that I don't even think anybody necessarily likes them, but YouTube algorithm pushes them for some reason, that are like pretty much just outright frauds. And then what happens is they generate this army of people following behind them that believe in the nonsense and you know, create content about the nonsense, right? So you've kind of got like the fraudsters, and then you've got the people that are, you know, falling for the fraudster, right? And then below that, you have this other group of people that are just like well-meaning, right? So they think that they understand something about the market. They think that they've been having success, but they don't actually understand the amount of data that you need and the pitfalls with their particular strategy and right? So this is where you get people that's just like, they've been trading for 6 months and then, well, let's start a YouTube channel because I'm so successful with it. Or you get these people that will come into my stream and they'll say like, oh, I've got this strategy, it's like totally profitable. And then, you know, we try it and kind of give up on it after a year, and they give up on the strategy too. And it's like, oh, was it? Okay, so it actually wasn't a long-term profitable strategy, right? Like, so when you get down into that level, there's so many of these people now. There's just masses. When we started, it was really just like me and that one guy. What's his freaking name? Well, Ross. There was really three of us. There was me, Ross, and this other guy. But those two were like the big ones that were popular, and there was really nobody else making content about it. And now there's hundreds, if not thousands, of these channels of people with YouTube. They all have like between 1,000 and 1,500 viewers. You know, like it's kind of crazy. Like our channel is very unique because nobody else is really trying to take this kind of empirical approach, and really understands the data. And yet at the same time, there's so many channels that are like the same size as ours. We're a dime a dozen. Especially at foreign channels. I saw this Indian guy yesterday running on his phone NFP and says, see how easy I just made 70,000. I just can't stand it, man. Because the empirical approach doesn't make you YouTube money. Well, I don't know. It's so like, okay, here's the funny part about that, 8Ball, is that I do have better content. And I think that if you go and you look into my stats, like how many views the videos have, and like what the engagement on them are, and the amount that I make in advertising per video, my numbers are really good. And I think you would probably find, if we were to look at other creators' numbers, that they are not on the same level. They don't have the same amount of engagement that my videos do and things like that, right? But YouTube does not direct the people to it, right? The people want to click on the thumbnail that says dollars, 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 prop firm this, prop firm that, right? And if you want to make a ton of money from affiliate links, it seems to me that it is easier to sell people on a prop firm evaluation than it is to sell them on a piece of software, right? So I saw this one person was claiming that they had made $40,000 in a month off of commissions from a prop firm, which I'm a little bit skeptical about. But yeah, this is like 1,000 subscriptions in a month. That's insane, right? And over here, I have these NinjaTrader indicators that show you things that you can't see otherwise. It's not technical. I had this argument with somebody yesterday about you don't like technical analysis, but you sell indicators. These are not technical analysis indicators. These are, what is the dollar index? That's not technical analysis. It's order flow. It's different. It's a completely different thing from trying to use past price history to figure out what it's going to do. But you know, I might have a handful of people a month that get that, right? I'm not getting 1,000 people a month doing that, and I can't, even if I was doing affiliate links, I can't sort out how you'd get that many. It's crazy. Yeah, live action is reminding me it's time to go. You know how hard the empirical approach is? You have to dress in old knight's robes and a crown and walk slowly to address the people. Yeah. First red flag if the video has a goofy face with 1,000. Yeah, totally is. But that's what I have to compete with, right? That's what I have to compete with. So, what do you take on Bitcoin? Do you see it hitting 100K before the year ends? Oh, I can't say that. It's possible. It's definitely within the realm of possibility. It's going. The question is, how much more money can you see coming in? Because it kind of seems to me like that they're having a hard time finding the buyers. People are buying in because they have like this idea that the U.S. government's going to buy it or something like that. But I don't think that's going to happen. The bigger issue here is that it's still a risky trade because Tether is printing money, basically. Tether is committing straight up fraud. They're acting like a bank and not being honest with people about it. And that's pumping up the price of Bitcoin. And if anything ever happened with that, then Bitcoin would just completely collapse. But is that going to happen anytime soon? It doesn't seem like it. It's kind of more of a long-term risk. But to me, Bitcoin, it kind of comes down to that. It's like you can get into it and you get out before something like that happens. Yep, no one wants to be told the truth that day trading is incredibly difficult and probably not worth starting for the vast majority of people. It is the truth. But apparently a lot more people are trying than I realized. it's frustrating because on one hand, it's like, dude, we have so much growth potential. Like, we've done really great on this YouTube channel, but the possibility for us to become a 50,000 or 100,000 subscriber YouTube channel, it could happen. It really could happen. But then on the other side of it, you can kind of see this thing where it's like, yes, but what we're giving people is not what people want. It's probably what would be the best for them, but it's not what they want. And that's a frustrating thing to me. That's why again, I was saying, like, I would like to have a business idea. This is something that, like, I can really dive into. Maybe it would be creating content on another YouTube channel, but I'm just not sure what it would be that I can really completely dive into it. One of the ones that I've thought about is, like, I could make a YouTube channel about ADHD stuff, because I feel like I have some insights into that other creators don't. But then it's like, yeah, then it's competition for that, and I don't know if I have the attention span for that. I'm still doing this channel. Hey Paul, on a small note, the change in America is kind of cool. How many years ago it was that almost all Americans were terrified of the market and investing, and now it's like the love's coming back. I don't know, hey Paul. I mean, you're right. Like, it is a good thing that people are more interested in the market, but along with that has come a lot of really terrible ideas and opinions about the market that, like this GameStop thing. Everybody got interested in the markets for the GameStop, but the GameStop thing just, like, miseducated a whole generation of people, and now they're going to believe these stupid things for the rest of their lives. So I don't know if it was actually, like, a good thing in the long run or not. And the change that I have seen is that I've seen, especially in the post-COVID world, is when people, like, really, really seem to embrace this thing. Is like, in order to be successful, you've got to scam other people. You've got to convince a bunch of people that you're a bigger expert than you really are, and get them to all follow you and give you money for something that's not actually worth it. Shit. And so many people have just thoroughly embraced this kind of mentality. Like, this is why the prop firms are profitable. I don't think I've ever seen a person where I talk to about these that support the prop firms that go like, oh yeah, the prop firms, these are really, really great companies. They really care about the traders. They're doing everything that they can to try and help you become a more successful trader. They are really doing God's work over there at Fast Track Trader. And like, you never hear that. Every person that you're going to come across to that is saying, oh yeah, like, it's a total racket. They're trying to screw you over, and they set the rules up in a way that tries to screw you over. But there's an opportunity in it for you. They all think that. Basically, they're saying, yes, I know that it's a scam, but I think that I'm the one that's going to make money from it and not be one of the victims. And I see this across society at, like, every freaking level. So they want to pursue these funded trader firms. They try and push Bitcoin on each other, right? So I'm holding Bitcoin. I want Bitcoin to be popular so that I have exit and I will get out before it collapses. That's what they're all. That's what Tether essentially is. It's we're gonna prop it up with fraud until it's too big to take down. That's what they're doing. It's just like this cultural embrace that I despise so much. What if we just, like, provided real value to people instead? I have thoughts of building a platform that simplifies building algo strats on Python for people who don't know how to code, like a block building strategies. What do you think about that? So I don't like it, to be honest with you. Okay, so here's the thing. Especially when it comes to Python, coding's not that hard. And coding basic retail trading strategies is not that hard. So there's all of these things. Like NinjaTrader has this way where you can kind of like build a custom strategy with like a little interface, right? I've messed around with it. A lot of people have come to me asking for help trying to debug things that they've done with that. And every time it always comes down to you can learn to write the code and write the code faster than you can figuring out how to use this interface. Or people say, oh, you use ChatGPT, and it's just faster to write it in code. The coding part is not as complicated as people think that it is. The problem with the backtesting is there's so many little pitfalls that you need to know about. That it's not the programming aspect of it. It's the actual constructing a strategy part of it. Things that people do that basically kind of invalidate your results. That's what's hard about it. So I don't know if there really needs to be any more tools to make it easier. There's already so many tools that make it so easy. Yeah. The programming side of it is one thing that I feel like is pretty neutral, that like maybe I could put some more focus into. It is, you know, I have this video, I have intuition. Let's look at this one last thing, and then I probably should be going. Video topics, planned videos. Funded trader programs are for suckers and an intuition. Then I also want to make influencer red flags and trader mistakes. Maybe. Okay, but then these ones that I get into after that are supposed to be super generic ones, right? So it's supposed to be, okay, now I am really trying to target these users that don't typically watch my channel and are, you know, they're doing technical analysis, price action, all of these things that don't really have empirical backing or contradict the empirical information that we have. That's another big one. Okay, like smart money concepts basically is just, you know, there are things about the market that we know that just directly contradict their theories. But you know, those people, they don't want to be told that they're wrong. They want to see information. They want to see setups, and they want to see big money and everything else, right? So I want to target them specifically with things like how much you need to day trade is maybe not the best one, but then you can get into, okay, let's talk about C# a little bit more. Let's dig deep into NinjaTrader a little bit more, because that video's done really well. Yeah. Dealing with tilt, that's kind of a generic overall thing, you know. And then we might have the time, so we'll see how far we get. But for now, I'm gonna rant about funded trader programs, so I'm gonna get going. I will see you guys tomorrow. If you haven't watched my latest video, go and check that out. I appreciate it. Oh, and give this stream a like. That helps too.